All right, hi Matt. Our next episode, I don't even know. We should put like numbers on this. We're probably at episode like 40 or something pretty soon. I don't know.
37. I think Alec put it in the title here.
Oh, okay, 37. Wow, 37 weeks of consecutive. We haven't missed a week. I think we've done every week at the same time, except last week it was an hour later. But we'll try to keep the streak going for every week at the same time as long as possible. I think it's good to be consistent on this. So yeah, welcome everyone, and Matt and I are here again to talk about just our thoughts on the macro markets. Tesla, Roblox has some new info they put out this morning, and other stocks that we talk about, and we'll take lots of Q&A. And as people might not realize, we're live both on Twitter Spaces and on our YouTube channel, Good Soil Investment Management YouTube channel, and it's recorded on both, so anyone can watch it later. I was on a Spaces last night with Naval Ravikant, actually, and there was like 4,000 people. He's like one of my favorite modern day, philosophers. Are you familiar with him, Matt?
I'm not. I did see that space that you were in, but
You're not
didn't
familiar with
join it. No,
Naval?
I don't know Naval. No.
Oh my gosh, you got to listen to him. He's so enlightening, man. You got to listen to one of his podcasts or interviews sooner. He's got all these crazy he's got these famous tweet threads too, like how to get wealthy or how to build. I forget what it is, but even the shirt I often wear is like Meaning Wave, and that Spotify
Yeah.
channel Meaning Wave carried it down. He has a lot of good riffs on a lot of Naval's um interviews about key insights he has, but it was really cool. And I raised my hand to ask a question, and he picked me to be one of the people to ask a question out of like the 5,000 people. It was pretty cool. So I got to ask him a question. I was like, what do I was like, what are some examples of things you've been wrong on recently? Because he's so like, and people think, so highly of him that he's like never wrong. And I'm sure everyone's wrong on a lot of things all the time. Right. But it showed some humility that he was able to talk about a number of things he's been wrong on in recent years. So it was cool just to ask him participate and talk to him and stuff. So for a minute. Anyway, and it was recorded. I tweeted it last night. If anyone wants to listen to that interview, it was really good. So let's get going and talk about the macro markets. Every week we keep thinking like, are we close to the bottom? Are we close to the bottom? Like what's going on here? And it's like it's like it's not really a falling knife, because that's like a much more violent crash down. It feels more like a butter knife just slowly like cutting the bread, the stale bread, trying to get through it, and lots of crust to get through, lots of layers of crust. I don't know. It's tough every week. We're just freaking dwindling down a little bit more. We have a nice up day like today. It's S&P 500 up 1.7, Nasdaq's up. Whoa, Nasdaq's up 2.5% already. So it's not quite.
That's a nice bounce. It's kind of surprising though that a lot of the tech names aren't bouncing up 5% plus. With like a Tesla's got a beta of 2. What are they up right now? I haven't looked at the daily chart in a minute here. So Tesla's up 3.4%. It looks like. But
Yeah.
you would expect the bounce to be a little bit higher for those high beta stocks, and it looks like it's kind of like the core S&P is performing a little bit better. It's not performing on a percentage wise better than like the NDX or the Nasdaq, but seems like there's a little bit of a disconnect between the beta there. Between those two different indices and some of the tech names. But yeah, this has been a week, and I think we've talked about this a little bit in the past, that Brent over at Spot Gamma, who is somebody I've been following a lot in the last 6 months or so,
Hmm.
has highlighted as what he thinks could potentially be the bottom, or at least we could have a strong rally. I think especially towards the back half of this week was kind of his thought. And the two main reasons that he highlighted. So for those who maybe are not familiar with Spot Gamma and what they do, they don't try to kind of give short-term guidance on every single situation, but they really track options order flows in tremendous detail. And they think there are some periods of time where options order flows can give you an insight on what the broader market is going to do. And this week is one of those weeks where he said, okay, here I think we've got something brewing potentially, which could spark a rally. And the issue, on the one hand, you've got the Fed meeting commencing right now. So having a little bit more clarity about Fed policy is clearly a good thing for markets. Even if it's bad news, just the removal of some uncertainty around that is generally a good thing for markets. But I think the expectation right now is like a 25 basis point hike, and so if that's kind of the consensus coming out of that meeting, I think the markets would generally view that as good news for March. But then the other issue is that there has been a huge amount of hedging in markets. So put volume for options expiring this Friday is quite large, according to Brent and all the stuff that they're doing over there at Spot Gamma. And so what he was essentially saying, if you kind of read through his interviews and some of the analysis that he's put out there, is that as those options expire this Friday, it would take either a massive down movement this week in order to kind of push markets even lower, or you would need people to re-up their hedges. So hedges cost money, obviously. So if you're buying a put,
Hmm. We
and
know
it's,
that. Yeah, don't we know it
yeah,
just
we
costs
do know
money?
that.
Yeah.
So like if you've got a short-term put that's expiring this Friday, and you say, all right, I want to hedge again for let's say a month out, you're going to have to pay, I don't know, many multiples of your current put value in order to get the same hedge, the same, let's just say the same strike hedge for 1 month out. And so
Hmm.
his mindset is that a lot of these hedges are going to start expiring, and you're not going to see a similar kind of delta dollar exposure on the puts getting rolled
Yeah.
forward. So if that's the case, then a lot of the market makers will just see their delta exposure kind of start to dwindle this week, and so they can they'll start buying some of these indexes and stuff to kind of reduce their own delta dollar exposure. So to me that makes a lot of sense, especially, I mean, Brent's tracking this stuff in really tremendous detail, and he's not trying to call highs and lows in any given week, but this is something he's been watching for well over a month, I think, now, and he's still
Yeah.
saying the same thing now that he was saying then. So
It's a good
obviously
indicator.
it's not
But
financial advice, but it seems like
no.
this could be
Yeah.
a week where we may see that bounce.
Yeah, it would be nice to see the bounce, but just one caveat is that they have really good data and information on the options flow and open interest and such. And it makes sense what he's saying, but take it with a grain of salt, of course, because I remember there was like some weeks, he was on Dave. I first learned about him when he was interviewed by Dave Lee on his channel few months back, and he was on Dave Lee's channel at one point. And he was saying like the open, similar with Tesla options, but he was pointing in like a direction where the stock was going to like really tank the next week, he thought, and then it went up. I don't know. So it's like, sometimes he's very wrong, obviously, or his data
Yeah.
is very wrong. So it's not a sure thing. It's just an interesting perspective to keep in mind amongst many other perspectives, such as the FOMC meeting, which is like the big thing, right? That's
Yeah.
tomorrow. And the FOMC meeting for a while, it was probable by the Fed futures that it was going to be a 50 basis point hike, but somewhere over the last like month with the market correction and the Ukraine Putin war, that volatility, that now Fed fund futures are priced in a much more probable 25 basis point hike. And I think that's pretty much set in, priced in with the market. But I think what you and I and at most everyone's going to pay super close attention to is the language and for signaling any forward guidance. They've been very, I would say, ambiguous in some of their language in some of the recent meetings or testimonies, or I feel like they flip flopped a couple times, and I think they need to put more certainty in their language. We'll see what happens tomorrow, but hopefully the certainty is like, hey, we're not going to necessarily raise as fast as everyone thinks, or we're going to. I don't know what they would do, but hopefully whatever language
Yeah.
they use, the market is okay with it, and maybe it's a good rallying point. What we hope.
So my kind of expectation, and of course I could be wrong, but I think with all the sanctions going on in Russia right now, and the kind of extreme spikes we've seen in commodity prices. Thankfully today oil came back down a little bit, but obviously the concern is in a macro environment where inflation was already pretty high. All these sanctions, and obviously the war in Ukraine could you know cause inflation to be even higher. So it's going to be hard, I think, for the Fed to try to balance that uncertainty when we are still in such an uncertain phase of kind of like the Russia-Ukraine situation and sanctions just starting to take effect right now. So
Yeah.
I'm expecting a little bit of vague language around, maybe having some flexibility around seeing how the Russia situation plays out and how that impacts their policy going forward. But
Yeah.
I think overall, though, the market's expecting them to be a little bit less hawkish than maybe was the expectation a month or so ago before
Yeah.
this situation kind of
Yeah.
unraveled in Ukraine.
Yeah. Yeah. I mean, NASDAQ was in bear market territory, I think down over 20% yesterday from its highs. So yeah, you can imagine that, if they say some things that the market interprets negatively, there could be another 10% plus drop in the NASDAQ even, or, S&P. And, that would really be major panic for among a lot of investors. Like, oh, we're in terrible bear market, recession, blah, blah, blah. And there's already that talk kind of going on with the recession. I mean, I really miss the days, Matt, where you and I could just talk about the macro markets for 5 minutes, then move on to Tesla and Roblox and Rocket Lab. I feel like now we have to spend so much time talking about the macro market because it's like the biggest influence of all the stocks right now. Like, even when a stock has great news about the business, it doesn't matter. It's the macro market that's dominating movement of prices of stocks right now. And it's not our specialty. We try to study it as best we can, but it's so complex. No one really fully understands the macro market, in my view, that well. People can only speculate and are often wrong. But yeah,
Yeah,
I mean, it's a tough time.
it's much. I think your probability of understanding an individual company and being able to use that information to say outperform the market over a given period of time. I
Yeah,
think that's a much more achievable goal than trying to understand macro and
yeah,
consistently beat macro. Like nobody can consistently like call macro, but some
yeah,
people can expertly know some stocks and kind of make long term plays around those. So
yeah.
um, as much as macro is dominating the conversation, I think it really still is important to keep looking under the hood of these companies. And gosh, right
Yeah.
now I'm loving the opportunities that some of these companies right now are putting out.
Trading at. Yeah.
I don't want to jump the gun on maybe our outline that we're going to talk about, but I think maybe that's a good segue to discuss Lemonade, which is now, at least as of yesterday, I'm not sure about
Yeah.
right now, but it's trading below their cash value. um, which if you think about what that actually means, and to be clear, it's cash, and they've got some liquid securities that are longer term in nature, but that they could liquidate right now for cash value. Um, but looking at what the market is saying about Tesla or about Lemonade,
Hmm.
they're essentially saying that Lemonade would be better off if they just shut the doors, closed the business down, and took all the cash and distributed that to shareholders. If they announced that tomorrow, then the stock would actually rise, which is like
That's
kind of
crazy.
kind of crazy when you think
If
about
they
it.
just like liquidated everything and bought stock back or whatever, yeah, or just gave it all out as a dividend, it would be more than the stock price is
Yeah.
worth. It's
So
insane.
like people think that the value of a company cannot ever be less than the cash value, but that's not necessarily true, because if you do a discounted cash flow in, say, a company like Lemonade, which has, was it 1.2 billion, I think, if you include the Metro Mile. It's
Yeah.
actually, I think it's closer to 1.3, maybe even 1.4 if you include the cash from Metro Mile on the balance sheet. And so, like, if you do a discounted cash flow, then, like, obviously they're going to burn a little bit in Q1. So then in Q2, you're going to have like a slightly lower cash balance. Um, so you can do a discounted cash flow evaluation and say, okay, the intrinsic value of the company is actually less than the current cash value. But then you would add back the cash value and say, okay, well, the company should get to X, some amount of X.
Yeah.
Um, but it's kind of crazy to me that like the stock is essentially trading at a negative intrinsic value.
Yeah, the only
Um,
time I've seen that before is when I worked at Interactive Brokers, right? You know the stock very well, but you work there, you get a stock incentive plan and so forth. And after the 2008 crash, then all the financial stocks took a hit, right? But everyone working at Interactive Brokers knew that Interactive Brokers was safe. It had a huge pool of capital. It was one of their best years, 2008, actually. It was like the business was booming because so many people left other brokers to come to Interactive Brokers because they realized it was more of a safe haven than a risk, like every other financial firm. And so it was a great year. They had great revenues relative to the prior years, and it accumulated a certain amount of equity capital. I forget what the exact number was. It might have been like 4 or 5 billion or something. I don't know, on the book. But the stock started, because the whole market was really deflated, especially the financial stocks after that time. The stock of Interactive Brokers traded close to $12 a share. And that was like the cash value of the equity capital on its balance sheet, and it was like insane. And so I remember there was a few like, very astute financial advisor, wealth advisors I knew that were like, hey, that knew all about Interactive Brokers, knew it very well. And like, I'm just buying a ton of Interactive Brokers because I don't think it's going to go below cash value. This is like the backstop. And they just bought it. But it did hover between like $12 and $15 a share, 12 and 16 for like a year or two before finally, and now it's like $65. But that was like 10 or 12 years ago, obviously. So it's, an all right return. But it was a weird thing when a stock is trading at its, cash value or even slightly below it, like you do get a lot of value buyers, I think, because I remember there was a lot of people that, were not interested in tech or financial or fintech. It wasn't even called fintech back then, but it was like one of the first real fintech companies, I feel like. But yeah, value people were coming in and buying it because it was like they were realizing cash. Wow, the stock's trading at cash. That's the backstop. We'll just buy it because it can't. The business is not going to lose money indefinitely or whatever it was. But Interactive Brokers was profitable back then too. But it reminded me that Lemonade could trade at this low, at this value for a year or two, even potentially before it appreciates. But it is a nice backstop. It does feel like that.
Yeah, I mean the risk reward obviously changes at this value. I mean, a year ago when Lemonade was obviously much higher than it is right now. I mean, we still kind of like the upside asymmetry that it offered. But now with where it is, I mean it's you. I think the bear case from here is just that they kind of slowly dwindle away and they never figure out the business, and then they just kind of, maybe the market cap decreases by the amount of the cash burn each quarter.
Yeah.
And that's kind of like the bear case right here, because like they can't drop 50% next week,
Yeah.
unless there's some kind of catastrophic news that is hard to fathom right now.
Yeah.
But if you look at their at their cash burn, I mean, like last year they burned $115 million in operating cash flow. The investing is a little bit tricky because most of their investing cash flow was actually just like investing in financial instruments. So I think the like operating cash flow is kind of the right metric to look at. That'll probably increase a little bit this year as they're continuing to scale and they bring on Metro Mile and they're building some new products. But like they were saying on the call, they expect 2022 to be kind of the year of like peak burn and peak losses. So yeah, the fact that it's trading so low right now, and a negative intrinsic value, just to me, it's like a good signal that that this could be a local low. Obviously,
Yeah.
like I said, it could keep going down over the next 12 months, even 24 months or beyond. But the asymmetry is even more skewed than it has ever been now. So
Yeah.
I really like the upside optionality right here on Lemonade. A
Yeah.
huge amount of execution risk, to be sure, but
Yeah. If
lot
they
lot of
do, a lot of
tail risk
upside
or tail
potential.
upside.
Yeah.
Yeah.
Yeah. Yeah. I think the car insurance, like we talk about, is the real catalyst. And later this year, they'll integrate it with Metro Mile, assuming that merger or acquisition is approved, next quarter. I think that's their estimate of when it'll be officially kind of approved and such. So um, that's going to be exciting the next year or so of Lemonade. So we'll keep a close eye. It's one of our top stocks, obviously. And other top stock that people come to listen to us talk about is Tesla. We did a great interview with Prometheus actually just the other day, and they published it yesterday, and I'll retweet it as well. But I listened to it again last night because I wanted to listen to it before I retweeted it or whatever. And I think it was a really good interview. We talked a lot about Tesla becoming the biggest company in the world and why we think that, and we'll tweet that out later. But yeah, I mean, the one one of the things we talked about is like the key man risk of Elon in that interview, and Elon's not doing himself any favors challenging Putin to hand-to-hand combat, and saying he's serious. It wasn't like, people think it's a joke, but he said he's serious, and he's probably serious. And now he kind of has fun with it, with these translations that you kind of translate that he's tweeting. But if Putin responded and was like, yes, I'll meet you at the Octagon at midnight on March 25th, I'm sure Elon would show up, and it would be freaking nuts. But yeah, I mean, what's he doing with this? What do you think, man? I mean, what's
I don't know.
Elon?
It it just you know, with Elon, you got to take the good with the bad.
Yeah, yeah,
That was ill-advised in my opinion. I mean, it was like on the surface level, I kind of laughed at it, but then just
yeah,
kind of thinking through it, it's just like that is a really dumb thing to to say, Elon. Like
yeah,
even if like let's take the most optimistic scenario that like Elon thought he could actually somehow end the war in Ukraine with single combat, which is like no, you couldn't. But like
yeah,
just assume that's what he thought. Like the Ukrainian people would have to be okay with like that outcome, which they wouldn't be. Like the Russians would
yeah,
have to, like Putin would have to sign up to be like, oh yeah, sure, let's go back to like the 1400s when single combat was a thing and like trial by combat. Um,
yeah,
so it was just like so ill advised. And then like even on like even if you did believe that like Putin's a black belt in judo, like is
yeah.
Elon really going to beat him with
Although,
this? Like
did you see Putin? There's like a 20-second clip of Putin exercising at a gym. Did you ever see that in one of the threads? It was like Putin stays in health, and it showed him like doing all these weird exercises at a gym. And I was like, what are these exercises he's doing with like these cables, like these like one arm things? And like,
yeah,
yeah, he's not that strong himself, I don't think, but he is supposedly a judo black belt. But I don't know. It would be
yeah.
like in fantasy world, it would be kind of fun. But yeah, I mean, this is not a time to kid around. And if it was just kidding, I'd be like, oh, that's Elon. Yeah. But then he said, I'm absolutely serious. And so,
Yeah, I'm seeing a couple people in the comments just say stop taking it so seriously. He was like obviously kidding, and hey, if he didn't say I'm absolutely serious or whatever in that tweet, I would agree with you. But like
yeah,
I mean, he pushed the envelope. I mean,
yeah, yeah.
so
Yeah, that's
I
part of
don't
the
know.
key
I
man
mean,
risk with Elon. I mean, he's just escalating his exposure to Russia, bad guy to Russia, number whatever he is now. Like maybe he was number 100, now he's number 50, bad guy to Russia. I don't know, but like he's not doing himself favors, like you said. He's his risk of you know trouble with Russia is not lower than it was before. Put it that way.
yeah,
Yeah,
unfortunately.
yeah,
Then he's also talking about rising commodity costs too, and we saw just was it last night? I think we had $3,000 price increases on the Model 3 and Model Y.
yeah,
Um, so how are you thinking about that? I mean, his tweet had me a little bit concerned at first, but then when you saw the price increases, I was kind of thinking like, yeah, Tesla probably is better able to weather this, inflationary storm or at least kind of commodity price increase storm that we're seeing right now better than almost any other company I could imagine. I mean, when you look
yeah,
at all the bad things that are happening, seems likely that the oil prices where they are and gasoline prices where they are is going to accelerate even further EV
yeah,
adoption, and which kind of increases the demand for Tesla, which is already supply constrained. So it gives them more pricing power. So I don't know. I'm
yeah.
kind of thinking it's all sort of net neutral, but I'm open to being wrong about that. How are you thinking about it?
Yeah, I mean, I think Tesla is in a better position than any other car manufacturer to weather the storm with their demand, and they can spike the demand when they want, however they want. Their supply constrained for a long time to come, but they can keep increasing prices. I don't think he really wants to. I don't think he wants to charge people more money. So I think he's a little bitter about having to raise prices. But he probably sent that tweet out after he realized, oh, we got to raise prices another 5 or 10% again. So this, and it's probably like he's sick of it, because it's not a good look to the economy overall or a great product that you got to keep raising the prices like that. And I think the problem is that even though Tesla can weather the storm better than anyone else, and we know where they're going to be in 5 or 10 years from now, the greatest business of all time, greatest stock of all time. But between now and then, a lot can happen, and one of those things could be, all this inflation and commodities prices going up, where it like bankrupts a lot of their competitors to a large degree. Like GM, Ford, Volkswagen, Porsche. They could all like their margins could get really hurt bad and it could just bring the whole quote unquote automobile industry down. And that could be like a mini macro headwind for Tesla within the car. Some people see it as within the car and the future of the car industry or whatever, even though we know it's much more than that. But I think that could just bring back all the boats down that are involved in car manufacturing together, including Tesla. And even though Tesla is weathering the storm, it's just not a favorable industry for institutional investors to be investing in. They just sort of like, I don't want to go in the automobile industry because of commodities. Let's focus on software now or whatever. Let's put more eggs into the basket of software. And so it could really just hurt Tesla's valuation, I think, even though their business is still going to be doing well. Ultimately, I said this on, I did an interview with Dave over the weekend, and I said it on that chat too, is like, it reminds me of like the saying, what goes up must come down. But in the stock investing world, it's the opposite, I feel like. And I think of it as like, whatever goes down must go up, come back up. And, that's assuming it's a good business, right? If it's a good business.
Well, that is an important caveat, I would say.
That's the assumption. Yeah. It has to be a good business. And we are highly convicted Tesla's a very good business, top business, over our lifetime, perhaps. So whatever goes down, if it's a good business, whether it's Apple or whatever, must come back up eventually, and so Interactive Brokers, that stock or whatever, I knew it was a great business when I worked there. It's not as fast growing, but I just knew I had this moat and competitive edge that no one could get past. So we knew, everyone who worked there knew the stock was eventually going to come back up. We just didn't know when. It took like 5 years though, before it broke like the $10 to $15 range again. So, it could be 2 or 3 years or more before Tesla, maybe it gets dragged down with all the others, to 500, 700 billion valuation or even lower. But it could be even like 2 or 3 years before, if full self-driving doesn't really come to fruition to the masses, if that doesn't come out soon, then, still could be 2 or 3 years before we break $1 trillion market cap again. It's hard to know. But you just know, if you own the common stock, at least, that in the end, it's going to work itself out and become huge again. It might trade range bound for years like it did from 2013 to 2019, and then suddenly go up 5x or more in a year, in 2025, let's say, so, I have confidence in that in my personal investing. In our fund, we're a little more aggressive a lot of times with options, so it's a little trickier for us to manage, but we're doing everything we can on the fund. But in personal investing, we have, most of us, you and I at least, have most of our net worth in Tesla common stock, obviously. And a lot of our investors, it's the same case, actually. So, that's sort of our thought.
This is where, like we talk about Lemonade having a backstop with its cash balance. And I think here Tesla's, medium term or near to medium term backstop is really just their earnings, their adjusted earnings that they post, earnings per share. We've clearly seen some multiple compression across the board, so that hurts. But if Tesla continues to post earnings, I think I don't know what average Wall Street estimate is right now. It's somewhere around $10 or $11. I think Gary Black and like my middle of the road numbers is like around $12 in earnings per share this year. So if you apply the PE of 100, then obviously that'd be $100 or $1,200 per share. If you go half that, then that's $600 per share. Maybe somewhere in middle of the road is more the right way. But then if Tesla continues to execute, and if these price increases are higher than the amount of the kind of inflation that's running through the business, as well as obviously there's going to be startup issues, running through Berlin and Austin whenever those do hopefully get up and running. But having a really detailed understanding of that, I think is where it's just super helpful to, kind of understand where the backstop may or may not be in the next couple of years. So, I have a hard time imagining that, the PE will drop lower than say 50. And I have a hard time imagining that Tesla's going to post, earnings per share less than, say $10. Of course it can happen. And that's something we got to be tracking very closely. But, to me, there's more upside potential than there is downside from where we are right now at 790.
Yeah. I mean, the business we know is huge upside, and you just got to hope that, the stock will be valued accordingly and come into line with the business growing 50% plus per year sooner or later again. I see a comment from Jay Kimmel that made me think of something. Jay Kimmel 11 on our YouTube live chat said, perhaps there is a method to Elon's madness in challenging Putin. There's a lot of comments, by the way. You guys keep throwing your comments. I see a ton of comments. I'm reading most of them. I just haven't had a chance to mention them. But I was thinking that too. There's a method to Elon's madness to challenging Putin in that. Like maybe he's trying to be funny at first, and I thought like, Then he said he's serious, which threw me off. But if he was trying to be funny, and it's weird. Then he said he's serious, but now it's like he's saying like funny things again. I don't know. Like,
oh yeah, you can bring your bear and I'll bring my flamethrower or whatever.
yeah, yeah. And he's like bantering with the head of the space agency in Russia, who like joked back or something, but maybe there is a method to that. Maybe like humor, he does believe in like memes and humor, being like a very powerful tool. I've heard him comment on that. And maybe there's something there where he thinks somehow we can get through to Putin in a satirical humor way or something. And Putin will like chuckle the slightest bit. And then like, I don't know, it'll change his decision making from there or something. I don't know.
Yeah, he did. I don't know. When I was reading it yesterday, or whenever it was first posted, he said something like, Putin knows that he can't, that he won't accept, and so it's like calling out that, it's like I see Stan Van Nys has a comment here saying emasculating Putin is a win, and so maybe that was his goal, just saying, look, he won't even challenge me to a, um, to a fight. So he's not the strong man that he always portrays himself as, like
Yeah.
walking around in the Siberian wilderness without a shirt. But if
Yeah.
that was his goal, I'd argue he hasn't been super successful in it. So I don't know.
Yeah. 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 It's a puzzle for sure. I mean, Elon has his reasons. I wonder what Grimes thinks of it. I mean, they're not together anymore, I guess, but they're still best friends or really good friends, and raising kids together and stuff. But she probably knows him as well as anyone at this point in his life, and she must have, she's an
Yeah,
interesting person herself too, though.
just had another baby, right? So
Yeah.
he's outnumbering me for now. I'll have to get back at it.
Yeah. I mean, you could argue Elon should just have like 1,000 babies. I mean, it'd be some, how many of them would be like super smart, geniuses in our next generation? Probably, he should just.
I don't know.
Anyway.
That gets dangerously into eugenics territory in my mind.
Yeah.
It's hesitant to step in that direction.
Yeah. Well, I mean, there's stories that some of the most famous basketball players of all time have like, hundreds of illegitimate kids running around.
Yeah.
So I don't know. You never know. So anyway, let's go on to the Q&A portion before we get too crazy here. So lots of questions I know people put out. I'll look through some of the YouTube comments that I know there's been a few hundred already. Wow. So I think Alec behind the scenes has been looking at the Twitter thread. We kind of make those a priority to people that put their questions in the Twitter threads, and then we kind of go through others as the YouTube comments and such. So from Yermar74 on Twitter, at what point do you get nervous about the Tesla thesis with an incoming recession and prices rising? Well, we kind of touched on that a little bit. I mean, I think we're not nervous about Tesla, the business. We're nervous about Tesla, the stock, and being caught up in the headwinds of the macro market. And then there's like the mini macro market of the auto industry headwind. It's like a separate thing almost, So that's, I think, what we're nervous about, right, man?
Yeah, I mean, it does seem like macro is driving. Oh, macro's absolutely driving the market right now. But what I would say is, like, I've been given Elon's comments lately. I've been trying to reassess. Okay, what is the probability that my own financial model is wrong, and Tesla's earnings or gross margin is going to be drastically lower than maybe what Wall Street expects. We had this. We've been spoiled by this track record in the last 3 years, really, of Tesla just smashing earnings estimates and margin assumptions like consistently, and that may not continue forever. So I still think it's highly likely that Tesla beats EPS estimates this year. But let's say a month from now Q1 posts and it's like a train wreck, or like gross margin is like 19% and earnings per share is very low. Then that would give me reason to pause and kind of reevaluate. So I think that's highly unlikely, but it's not a non-zero chance that the situation, the materials cost is just a much bigger issue than maybe we've thought. So that's maybe the only kind of caveat I would say to what you said, Emmett.
Yeah. I see someone in the comment, also a couple comments about in the YouTube live chat about why Rocket Lab is getting killed today when the rest of the sector looked like it's doing okay. I mean, Rocket Lab is, day-to-day movements is very hard, and Rocket Lab, wow, it's down 7% today, 7.5% is dropping. There's volume is high today. It's got it's down 7.7%. Volume of 5 million shares already. An average volume for a day is 3.3 million. So 5 million already. it's a lot high volume day of a lot of some institutional seller must be selling a big chunk of Rocket Lab today. I'm guessing. I don't know who or what for what reason, but there's certain days where the Nasdaq was hit hard, like 3% down yesterday or Friday. I can't remember what day, and Rocket Lab was like actually up, 1% or
Yeah.
something or 2%. So Rocket Lab is it's not really as it doesn't trade in line with the indexes as much as the other stocks we talk about. I don't think it's a part of any of the indices, right? I don't think it's officially part of
No.
even the Russell 2000 at this point. But my guess is just some institutional seller on a day-to-day. I don't see any news on it today, but some institutional sellers getting out of a big position, I would imagine. I don't see why else it's down 8% now.
Yeah, there was no news. I mean, they had some like kind of inconsequential product announcement. I think it was last night that they're doing some qualification testing on a product. But yeah, that one has been slightly disjointed from the broader market lately. But gosh, that's another one we haven't really spoken much about. But gosh, the value of it. And the thing I love about Rocket Lab is they are so aggressive on their pace of innovation. We like Lemonade for a lot of reasons, but Rocket Lab is moving so fast, a lot like SpaceX. Now it takes a long time to get these huge projects moving along, but my sense is at some point the broader market will wake up and realize that Rocket Lab really is the clear number 2 worldwide launch provider, and at that point it won't make sense in my mind that they have a $3.5 billion market cap. That's just, in my mind, shockingly low for their capabilities. But
I see Astra Space, which is a small. We don't even really count as the same league, but I know a lot of people compare it because they're trying to send small rockets up to low Earth orbit, although they haven't really been successful yet. I think their market cap is 830 million, so it's like 1/5 of Rocket Lab's market cap. But that's also down about 8% or today. But that's a very small, like almost borderline microcap stock. Its territory. So day-to-day movements on
Virgin Galactic is up 3.6%, which is makes no sense to me.
It doesn't make sense. So let's go to the next question here from Twitter, I guess. Let's see. From Clint Squires on Twitter, do you think Musk has increasing interest in politics as he deems it a risk to the objectives of his businesses? I do, he does seem to be chiming in more and more these days on politics than 5 or 10 years ago. I've been following him for 12 years very closely now, and he seems to be chiming into opinions about politics and now global geopolitical stuff more often. I think he's become like one of the most influential people in the world. People expect him to chime in on every major issue, though. So and he has opinions, and maybe he's probably always had opinions on political stuff, maybe, but now he's just more compelled to share them. People almost expect it of him, and maybe it's the consequence of getting older, and he sees maybe that's true. Like a risk, the political changes can be a huge risk for whatever his main goals of creating self-sustaining civilizations on Mars versus advancing all transportation to be sustainable, and such.
And the kind of issues Tesla has faced as a result of all the bureaucracy in Germany with that Berlin plant opening. I do kind of view his experience with that as one of the major kind of reasons that he's harping on the need to kind of remove a lot of these procedures over time, because he makes this comment that if you don't have a process to kind of remove procedures or like policies or processes that governments impose over time, then eventually they just build up and build up and build up, and you've got this red tape which makes it impossible. And I absolutely saw that in the energy side of the business when I was doing that. There were a lot of developers that we were talking to that had like promising technology, say for like pumped storage is like a storage technique that's really great and could have some really useful applications, but it's like a 12-year like approval process timeline, because you got to get all these studies done, and then you've got like local and state and like federal regulations that you got to jump through. And if you think of like the cost of capital and all the different permits and all the studies you need to do for that, it's like it kills the probability that you can actually have a successful project. And
Hmm.
so that, mindset certainly applies to a lot of other things. So if you can just not get rid of all regulations, obviously, but get rid of unnecessary ones that are actually net harmful. Because if you eliminate some technology's capability to succeed at all in the economy, then you're actually kind of hurting the overall economy. So there's some right balance where you've got um, useful regulations that are helpful to kind of protect people, but not so many that it's impossible to get work done. So I think that's a less or a takeaway that not many people are thinking about. So that's the more a high profile person like Elon harps on that, I think uh, increases the chances that some politicians start taking that seriously and start doing that work of removing regulations rather than proposing new ones.
Yeah. All right. Next question is from Duhamel 18A on Twitter. What do you think about Joe Justice's comments on Tesla? I'm bullish, but struggle to believe what he says is accurate. I haven't listened. I've heard people kind of paraphrase some, the gist of what Joe Justice, I guess, is talking about in his interviews. I guess he's been interviewed a few times. I haven't listened to one of the interviews myself. I just kind of, when I heard people's kind of reports of what he's talking about, I just felt like it was like way too bullish on the ultra bull. That's not going to help me. If anything, if I buy into it, I'm going to like go all in on like 5,000 strike call options for next year or something of Tesla, like if I believe what he says, but, so I don't want to be tempted with, even listening to potentially buy into the, some of the metrics he throws out, to be honest. But that's not saying he's wrong. I think the likelihood of him being right on the metrics I've seen cited that people cite that he's saying are not likely to, to come true in my opinion. But Matt, have you heard him talk in any chats, or do you have any opinion?
No, I haven't. Yeah, I have spent, I don't know exactly how correlated these are, but like Warren Redlick is another other kind of like ultra bull, and I spent some time like let's give him the benefit of the doubt on some of this stuff, and he had in my mind like massively fatal flaw in his assumption around battery economics,
Mm,
where he was kind of assuming that you could kind of maintain current pricing or like close to current pricing, and there would be massive demand for mega packs. But like from my experience, I'd run like the analysis of like how much value batteries can provide to the power grid, and the margins are really tight there. And so if you get to the point where they're already tight and like the IRRs in many cases were negative on the projects that I was looking at applying batteries to, and then all of a sudden you start flooding the market with batteries, well then that like that creates the arbitrage opportunities. Those are even smaller going forward.
hmm.
So the very detailed modeling I was doing around um, you know Tesla's battery economics was just like a fraction of the revenue that the long term revenue. Because short term, I think there's plenty of demand, but in the long term, like if you're going to assume like a terawatt and a half of stationary storage revenue going or capacity going forward, you're going to need to drastically reduce your revenue because like the current energy market is not going to have demand for anywhere near that, at a price of say, $200 per kilowatt hour or something like that. So, um, yeah, I'm not super familiar with Joe Justice's, but I did take a deep dive on Warren's, and I think it's best to take those Super Bowl cases with a grain of salt.
Yeah, yeah. I think so too. I mean, there's always going to be a spectrum, right? And there's like in the middle is like of a spectrum is like what's probably most true, and that one end of the spectrum is like the bear case stuff, and the other end, the other part of the spectrum is overly bullish,
Hmm.
and we're biased to be on the overly bullish side naturally, right? Because we have been, but I think at this point in time, it's important to kind of be aware of the spectrum and where every person might be on that spectrum, So,
Yeah, and like I do think that there's a reasonable probability of like a mega bull case out there. To be clear, like especially around autonomy, like I think there's a reasonable case to be made that Tesla solves autonomy, and then they've got essentially unlimited demand, and so every single vehicle will have full self driving, and they'll be able to charge say $30,000 for it, and they'll get a platform fee of like a third of all billable miles, and maybe you
Hmm.
charge that at like 50 cents a mile or something. You do the math on that, and it's like kind of insane, and I think there's a very real probability that that happens.
Yeah.
But it's not clear, like it's not clear that we're close to that point yet. So
Yeah. From Alex B on the YouTube live comments, Russia has about 130 billion in physical gold and desperately needs cash. Any thoughts on gold price based on that? Hello from Ukraine. Hello, Alex. Hope you're staying safe in Ukraine. It's a very scary time over there, I'm sure, and the world is watching and praying for the violence to stop and senseless bombs and missile. It's just such a horrible tragedy. Anyway, so Russia has 130 billion in physical gold and needs cash. Okay, so I guess they could melt the gold and sell it, through black markets.
what
Worst case, I mean, there's so many sanctions. Not many people, not many banks are going to be allowed to buy gold. But I know, there's probably certain countries that aren't part of the sanctions yet that could buy. Or what do you have a thought on this, Matt?
Yeah, I mean, in many respects, I think the ball is like in China's court here. Where China has not joined the sanctions of the West. There's, I think, diverging thoughts within China of how best to kind of approach the situation. Um, but I think that's probably Russia's best bet to is if they really desperately do need cash. I think it would have to come through China. I mean, like you're not going to get 130 billion dollars worth of liquidity like out of Syria, another ally,
Yeah.
right? Like,
Well,
so
India seems to be in a similar boat to China too, right? I
yeah,
mean,
that's true. That's fair. And
yeah,
there's a huge market for gold in India as well. So
yeah,
I don't know. I mean, I'm not familiar enough with the gold market to know how much of a discount or how quickly they could kind of liquidate that volume. Say in the next month or two, which is
yeah,
my understanding of when Russia really needs the cash. But yeah, I think the economic pressure is very real, and it's not clear that they'll be able to access that liquidity. Um,
yeah. I saw an interesting comment by Nassim Taleb. He made a good point that he's been sort of a Bitcoin bear in the last year or so for sure, but he argues that gold is more of an anonymous asset to hold than Bitcoin. If you own a lot of Bitcoin, if you own a large amount of Bitcoin, it can be traced on the blockchain, by authorities. They can see where it's going and who's getting it and such, wallet to wallet. But gold, you can just melt it down and then resell it, and no one can know where it's from or who. You lose the tracing of it. Um, so gold in a way is more advantageous than holding Bitcoin for a sovereign country or a country that's trying to do stuff, bad stuff, whether it's North Korea or Russia. It sounds like than Bitcoin. I know people talk about Bitcoin, the government. People theorize that Russia's accumulated a lot of Bitcoin, but I'm not sure that's the case.
yeah, I don't think they have, but like I
Yeah,
mean, there's pros and cons with both. To be honest with you, like you've got to physically move the gold. Is one pretty significant issue.
hmm,
So like you could imagine if there's like a blockade that is enacted or something like that, like how would you, physically
yeah,
move the gold? So like I,
yeah,
I don't know.
yeah.
It's I
Assuming
think
you
we're
can
gonna be
move it,
learning lessons
then
for
yeah, it's
years though
pros
about
and cons. Yeah,
yeah.
it'll be interesting. Next question will be from Enrique Moctezuma. Have you guys delved into the innovation defense space? Defense space, Palantir, for example, as they're the only public company in this space at the moment. Any opinions? A lot of people love Palantir, and I've tried to dive into it a little bit, and I understand conceptually they have like this big data. They make sense of big data, and that's my 3-word elevator pitch. Making sense of big data for governments or whatever is their top clientele. But I don't understand it well enough, and I definitely don't understand the whole space well enough to really have conviction on Palantir. It might be one of the best companies. Like I know there's a huge like community of Uber bulls on Palantir, but personally, I'm just not there. Do you have any thoughts, Matt?
Yeah, yeah, pretty similar to you. I kind of get the the bull case, but I talked about this a little bit on the interview that I had with Farzad, where like Palantir doesn't actually own the data, so how transferable are any of their kind of learnings that they get from one company? How are they going to translate that to another company or another branch of a government, for example, when
Yeah.
they're not actually in charge of it or owning the data?
Yeah.
So that's a concern. Another concern is like the TAM for government contracts doesn't 10x over 5 years. So
Yeah. Yeah.
you know how do they expand kind of beyond just government offerings?
And the government, you have to keep in mind, it's by its almost every government by its own like inherent DNA is going to have some level of corruption and like a lot of things like borderline corruption, I would say. And like government officials picking companies for contracts, they don't necessarily, I think we want to envision governments picking what's ultimately best for the country, or best for keeping dollars, the cost of things in check, but I don't think that's the case with a lot of government stuff. I think, there's, whether it's wining and dining or, GM giving a special, position to the nephew of a decision maker, like I think George, Biden's niece was given, I think there's other things that go, and I don't think that, Palantir has to compete with that. You can't really compete with that. Like, yeah, there's going to be some governments, decision makers that are going to say, oh, Palantir is the obvious. But if there's someone else that can do something similar, even if it's a higher price, if it's a, good old boy network or whatever, I just think that's a very hard competitor to define and win over. It's not like a free market, best technology with lowest cost and best product wins. It's different. It's a different ball game when you're dealing with government contracts. I think it's just, I don't, it's just much more gunky and messy than people I think can imagine.
Yeah, and there was it was a couple weeks ago. I think they announced their fourth quarter earnings, and I think they were strong earnings if I recall right, but they really decelerated on the top line growth rate, or maybe they lowered guidance. So there's kind of renewed concern around government procurement
Yeah.
policies maybe changing, because
Yeah.
we've talked about this a little bit on Rocket Lab. Actually, the concept of having strategic redundancy, where you don't want to be relying on like one monopoly service provider to do everything for you in the
Yeah.
government. You want to have
Yeah.
backup options. So in some ways, if they're super successful, they can become a victim of their own success, where the government will need to have backup options. So, but all
Yeah.
that said, I'm willing to be wrong on that. It's not one, like you were saying at the beginning, Emmet, that I've studied, put my 10,000 hours into studying that stock, the way that I have with
Yeah.
Tesla. So it's certainly possible that I'm wrong, and maybe it is going to the moon.
Yeah. Yeah. Let's go to the next question from Mike. You mentioned there's Roblox news and you haven't talked about it for 2 months or so. Any new thoughts? Yeah, we're getting slaughtered. Roblox is getting, all the growth tech stocks are getting slaughtered for sure. And Roblox has become one of them, unfortunately, now. And the news
We did
today,
speak about them a couple weeks ago, though, just to be clear. So
yeah,
it's possible somebody missed that one, but when with the earnings
earnings.
release that came out
Yeah, we
last
did
week
talk
or
about
last
that.
month, we definitely did talk about that.
Yeah,
But
we
yeah, sorry,
did.
go ahead.
Yeah, so they just had some news today. They published about their February user stats, and they don't seem to publish just every single month. But I'm not sure what the rhyme or reason is for the months they do publish it or the months they don't. Hopefully, they just make it a consistent month over month thing going forward. Um, but they must be publishing it because they think it's important to show that their daily active users is staying at a sustained 55 million per month, 55 million per day rate, their daily active users for the month of February. So I think they noted that in their earnings report that in January they saw very strong monthly active users or daily active users of around 55 million or 54 million. Now it's 55 million. So in the previous quarter, Q4, I think it was like 49 or 50 million. So it's jumped like 10% starting in January. It seems like there's a lot of seasonality to study with Roblox. I studied their charts and their infographics a lot, and you have to really look month by month at things or quarter by quarter, especially, and realize, okay, every year at the first quarter, there's a jump. And then every year at the fourth quarter, there's like a decline, or, you have to kind of study the seasonality. And it seems like this bump is a strong bump for their seasonality. Like 10% jump, from just a few months ago in daily active users is pretty nice. And I don't think they'd put it out if they weren't proud of it, since they don't do it every single month. So their bookings, I think they put out there, and it's a little lower, but I think they've signaled that their average bookings per user is going to be a little lower for a little while as they expand their geographics or demographic to be in more emerging markets, as well as already in the U.S. and Canada and the United Kingdom where it's strong. But yeah, I mean, I think I'm still confident in Roblox, medium and long term. Short term, all the growth tech stack multiples have been hit huge. But like we were talking about before, good businesses will come back up, and we believe Roblox is a really good business. It's a platform. I saw some guy tweet last night. I followed the guy who put like a hit piece about Roblox, doing child abusive stuff or whatever it is, and the fact is that's everywhere on the internet where children can interact with other people. And he said that he thinks Roblox is going to be under $5 at some point. And I kind of chuckled, and another guy, Will Hershey from the Roundhill Ball, ETF, commented on it. And I don't think a lot of people understand that Roblox is a platform. It's not just a set of a few games that could be a fad. It's a platform. Any game within the platform could be a fad, but the platform itself, I don't see it as a fad. But Matt, do you want to say anything else about Roblox?
Well, Roblox is another story stock, probably more so than the rest of the names in our portfolio, I would say, which makes it very prone to short-term swings. I mean, just a couple months ago, it was like $130 a share. So it went from an all-time high to an all-time low in just a drastically short amount of time. But it's one of the problems, like when I was starting to do the financial modeling around this, it's very difficult to go out to say 2028 or pick your year and make a reasonable assumption about what's the revenue going to be and what's the cost structure going to look like, because it's so hard to kind of extrapolate what it's going to look like from there. But nonetheless, you've got to try, and so you can have just slight changes in kind of your growth rate from here to there that will result in massive changes in your kind of implied volatility, or not implied volatility, too much option trading lately, in your implied like share price. So it's one of those stocks that's going to be, I think, prone to drastic swings. So you could imagine, they post a bad quarter, it could swing down a lot lower than it is right now. Or I could imagine a scenario for sure where they post really strong metrics, or if they start to focus on monetization, which has not been a focus at all for them yet. I think that would send an incredibly strong signal if you started having some kind of meaningful margin metrics that you could start honing in on. Because right now, every single analyst is kind of left to their own devices to say, okay, how fast do I think top line is going to grow, and what does their OpEx growth look like? Because they're both growing really at a very rapid rate right now, and are trying to open up new revenue opportunities, like events, which are just at like the very kind of like earliest infancy stages right now, that I think will likely be massive. But it's hard to put pen to paper on that and say, okay, yeah, here's how much value per share that opportunity represents. Because at the end of the day, every analyst is just doing their best to kind of estimate it. So I think it's going to be more prone to swings than most other growth names.
Yeah, I would agree. And someone else mentioned, what do you think of Shopify in the comments? And that's an example of a stock that like so many people I respect have super highly valued for such a long time. That was like $1,600 a share. No, I see high of $1,750 a share. And now it's at $540 a share. So that even a company stock that so many people I respect greatly love that stock. I personally don't understand it enough. I don't use it. I don't understand it enough to like have my own personal conviction, but there's a lot of people, perhaps that's the stock I at least understand that I think other people I highly respect love it so much that I almost would buy it, just on that. But I don't do that. But if I did, that would be one of the stocks I would. And that's been cut by like, 75% too, Shopify. So Roblox was cut by 75%. It doesn't mean it's a bad business. I mean, it could still become like it could still rebound. I think, in these sell-offs of tech stocks, when the last ones, and whether it was .com bust or 2008, 2009, I mean, you've seen a lot of great businesses stock price get cut by 80%, and they've come back eventually. So, well, that's what we think could happen with a lot of stocks that we're involved in, and just a lot of stocks in general. So,
Yeah, I think what this is not anywhere in the comments, but one I've been that's on our watch list for a while, and we used to own it in the fund is Square Block now. But they're down like 65% off the highs. But they've actually got I think pretty reasonable valuation metrics where you can actually look at their PE ratio. You can look at their price to sales, and you're getting close to value territory with them. So that's a name that we're not long right now, but I'm certainly looking at them as one of the top names on our watch list.
yeah. All right, we'll do one more question that Alec will put up here, getting close to the hour, a little over it. So from Aaron Gray, what weighting do you give on Lemonade becoming a 20 billion market cap over the next 10 years with high operating leverage, large addressable market, etc.? I mean, I would say if they're not over 20 billion market cap in 6 or 7 years, that means they probably failed. That's my thought. I would say 5 years almost, but I'm trying to just add an extra couple of years buffer because things can sometimes take longer. What if car insurance doesn't get approved till next year and takes an extra year for it to begin implementing or whatever? And so I'm just trying to add some buffer. So in like 6 or 7 years, that's when, it's either going to be 10 to 20 times what it is now, 20 times plus what it is now, I think, or it's probably failed and been bought out somewhere along the way for, maybe it's close to cash value like now, or maybe at some premium. Maybe it's like a big factor I see with Lemonade is, I don't know if Shai and Daniel Schreiber, I don't know how determined they are to stay, controllers and owners of Lemonade, or if they do see some kind of exit at some point to, if someone came along and said, hey, I'll buy Lemonade for $10 billion, would they sell it? So, maybe in a couple of years they're doing well and their stock goes up to $100 again. Someone buys them for $200 a share or something. That could happen too. But, I think, the weighting I would still say is 50-50. I mean, we had that discussion with Paper Bag Investor and we gave our odds, and I said 50-50 on whether I think Lemonade ultimately succeeds or not. And Matt, you were a little more confident. And
yeah, I thought you were more like 70 or something like that.
I think I said 50-50. Yeah, I said 50-50. Okay. I was a low end. You and Paper Bag Investor both were higher than me. And maybe I said 60-40. I think I said 50-50 though, to go back. But 50-50 is a great bet. Like either 50% chance that it's like bought for, maybe, worst case, like they burn cash like crazy and the business doesn't go well, and half the cash on their books is what you get out of it after they get bought for their technology or something. That's like worst case in my mind. Best case is they go up 100x from here in 10 years, and that's a huge return. And 50% chance of that happening, I mean, I'd take that all day, but that's a long, patient waiting game, obviously. But yeah.
Yeah, I think I said in that interview we had with Paper Bag, I think I gave it like a 75 or 80% weighting. I think after the Q4 print that we saw, indicated there could potentially be an issue with their underwriting capabilities. That's not a death knell by any stretch in my mind. I'm sure they'll learn from it, but it's kind of one data point in the direction of less optimism. So maybe it's if I had to give my weighting right now on, let's just say 20 billion in 10 years, like this says, I still think it's more than 50%. So I don't know. I'd probably say 60% or so. So maybe I'm bringing down my probability slightly, but
yeah,
if you do the expected value on that, again, that's like you clearly take that bet all day long. And I think there's a decent chance that that they could be much larger than that. Like you said, like they could 100x from here. And like I'm in the process of switching my home insurance over to them actually, because I was just playing around with it.
Nice.
And I meant to talk about this maybe a week ago. I haven't pulled the trigger yet, but I got a quote on my home insurance compared to what I'm currently doing right now, and it was slightly higher. But then I was like, they've got this functionality where you can just start adjusting all your variables, and you get your quote adjusted in real time. So as I was doing that, I was like, well, I don't need my deductible to be nearly as low as where what I'm paying for right now in my current insurance.
Hmm.
And I so like I just started playing around with it. And I was like, oh, I can actually lower my rate just by increasing my deductible and a couple other things that I want to adjust for my own individual needs. And I
Hmm.
don't at all want to try to do that with AAA, my current insurance provider. Like get on the phone with an agent and be like, well, okay,
Yeah.
can you run this for me at a
Wait on
deductible of
hold
like
and be
two
transferred to
thousand
different apartments.
dollars?
Yeah.
And then like, oh, and by the way, like we're doing some construction right now, so like I need to add like 500 square feet or like it's just such a pain. Like I don't want to do that at all. Like even if I'm gonna save maybe like I don't know $50 a year or something like that, it's just
Yeah.
like a terrible user experience that I don't want to go through. So like I'm not gonna bother doing it with my current provider. But I did it in like 2 minutes with Lemonade, and that's such a that's such a compelling offering. So maybe I'll report back once I finally do pull the trigger on it. But I mean, again, the customer experience is just so much better when you can do things like that. Um, than with kind of the current incumbent. So I do think at the end of the day, having a great product will likely win out. They've got a lot of work to do to kind of make the back end, like the business model work. Um, but having the great product is the harder thing to do than to kind of get the finances in order.
Yeah. Yeah. Well, let us know. Keep us know. I'd love it. You should just do the lemonade just for so investment research. I want to see your I should be doing it too on my car insurance and other stuff just to really experience it more personally instead of reading other people's experiences and I gotta just do it.
Yeah,
So
they
I
don't offer
yeah,
the car insurance, I think, yet outside of Indiana, but I know like Bradford Ferguson is in Indiana, and he I think recently signed up for it. Said it was a pretty good
Illinois.
experience.
I think
So
it's Illinois, right?
I
Yeah.
think it was Indiana actually, but
Oh, maybe.
I could be wrong.
Okay. And so we'll end it with that. One thing I saw on the comment, I was just reading through the comment, lots of good comments. We need to pay more attention to the comments and interact more because there's lots of funny or interesting comments. But one is unpopular from Winston L. Unpopular opinion. What probability would you assign for a stock market to bottom this month? And we talk about this a lot. Yesterday in our kind of chat, we talked about it a bit too. And these probability things, you also have to realize like we don't have any quantitative way. We're just like putting our fingers in the air and trying to judge with our gut instinct, like what do we think the probability if we had to pick would be. And we're either right or wrong with our probability guesses. And over time, with a large enough sample size, our performance, it will be direct feedback on how right or wrong we are. And I mean, it's very hard, like very loose. It seems like this month the market bottom is like a 40 to 60% chance. I would say 50-50, but that's too boring. I'm just saying it could be 40% or 60%. I don't know. Somewhere in between there, I think is the range of the market being bottomed this month. Matt, what do you think if you had to guess?
I think more than 50% chance that we've hit the bottom.
Okay.
Again, I could be wrong, and probably if you would have asked me last month, I don't know, I might have said 50-50.
Hmm.
But it's just we're getting to the point where there's like the PE multiples are just so compressed right now that they almost don't make sense. So to me, it's of course things could deteriorate further. I think inflation risk is like the macro environment has certainly continued to deteriorate this month. So I think that's why we're seeing the overall markets kind of come down as swiftly as they have. But um, I think there comes a point when all the money sitting on the sidelines that we've been talking about for a long time now says, hey, you know, it does make sense to buy Lemonade at less than cash value, or
Yeah.
some of
Yeah.
these other growth names that like Tesla at a PE. I don't know exactly what they're trading with, like the Wall Street forward PE right now, but a lot of these names are starting to look pretty attractive and just on like pure kind of multiples or historic valuation basis. So
Yeah.
I put the probability at more than 50%.
That's
Not
interesting.
investment
I'm
advice though.
I'm gonna tweet out a poll right after or right now or about the time we're leaving. I'm gonna tweet out a poll to my followers and see. I feel like if enough there's not many people listening to this live. So of the 30 something thousand followers I now have, if enough, if hundreds of people answer like, if it's like a 70% chance that people think the bottom is in this month, I don't think that's a good sign. I think if only like 30% say the bottom is going to be this month, I think that's a good sign. So let's see
Yeah,
what the sentiment is of all
it's
the people that follow us because the market usually does what what less people expect.
Yeah, it's interesting. I tweeted yesterday that I actually bought some more Tesla for the first time in a very long time yesterday in my personal account, and I got so many comments from people just being like, "Oh my gosh, it's gonna fall to 600! Like you did it way too early." And I was like, "Okay, that's a good sign that there's still so much fear in there that maybe like those comments that were so kind of fearful, that actually kind of was reassuring to me that." When there's that much fear, people tend to be that might be a good indicator that the bottom is near.
Yeah. Okay. I added I was out of C results. All right, I tweeted it out. Let's see what happens. We'll probably get hundreds of answers in the night for people that are going to be on the. We're ending this Twitter space. I just tweeted it out, so hopefully in the next few minutes we'll get hundreds of votes and have some kind of indication. Should just would have been a cool question to tweet out at the beginning, and we could have gone back to it to see it now. Okay, so far 16 votes. 50% are saying this month. 19% say sometime after. Oh, that's not a good sign. It's only 16 votes so far. but that's usually an early indication. Let's see. Yeah.
We'll give this some time.
We'll
give
it
the
some
time to breathe.
Yeah, give it time. All right, guys. Good chatting, and we'll be back next week at the same time. 50 votes now. Okay, 38% and 38%. So now it's even. It's a little better. Okay. All right. Well, we'll be back next week. We'll talk about the results maybe. All right. See you guys later.
Thanks for watching, everyone.
All right.
Bye.